Hello and welcome to my halted evolution. I'm going to be sharing my budgeting method of choice, the zero-based budget, with you guys today. I've formally learned about this method from Dave Ramsey and informally learned about it from my mother. If you've ever heard people talk about giving every dollar a ... then you've probably been talking about the zero-based budget. The way we budgeted growing up was the back of an envelope, usually one that a bill had come in, to see exactly how we would make whatever money we had left stretch for however long we had left in the month. The way I learned with Dave Ramsey was by looking ahead to see how much you expected to bring in and figure out how you would allocate funds. His perspective made the budget far more empowering than how I learned growing up. Like every budgeting method, the zero-based budget has pros and cons. This method may not be for you. As much as it helps me calm my anxiety and gives me a sense of control, it may increase your anxiety and make you feel too constrained. Comment below on what your budgeting technique is. I might make a video explaining that approach. Some of the pros of the zero-based budgeting are: it lets you give specifics. I can usually tell you exactly what we pay or bring in. The cracks that money can slip through are smaller. The only money you really have to worry about slipping through your fingers is the extra few dollars you might have with your paycheck. I feel that you can plan ahead better. In college, I basically used a simplified version to make sure I had money for my bills months in advance. This technique helps break down exactly how long it will take for you to save up for vacation, new appliances, or new car because it helps eliminate variability. Some of the cons of a zero-based budget are: you need to have an idea of what your income and bills are. It's really hard to just jump into a zero-based budget when you haven't gotten your first check or you haven't established your spending habits yet. You may need to do some research to figure out what your history is, or you may just have to cross your fingers when trying to figure out what your income will be. Give yourself extra grace if you have no experience. Try to keep extra spending to a minimum while your first few paychecks come in to make sure you do have enough for bills. It's not as flexible. You've assigned every dollar a name. It already has a place to go. You can't just spend your gas money on concert tickets. You can squander extra money easily. If it isn't assigned to anything in particular, then it must be assigned to that bag of candy and the new purse you're holding it in. Bills need to be known. Annual bills can be easily forgotten, but because they are annual bills, they can also be enough money to have you eating ramen for the month. Plan ahead. Know when bills will come due. The basic zero-based budget steps. Know what your income is and when. If you're in dire straits, you will probably be budgeting paycheck to paycheck. You need to know which days that money is in your account. As you get better financial footing, you can start budgeting further out. I plan the month ahead and don't really have a buffer in my checking account anymore. Some people have an entire month's worth of money in their checking account as buffer. Some people have months planned ahead. Know what your expenses are. Bills. How much is due when? When I started, I had the last date I could pay it without incurring a late fee, in parentheses, by the bill. Debts. What is the minimum payment due? What is the total balance owed? If the avalanche method appeals to you, then you need to know the interest rates. I would also advise knowing when any introductory rate ends if you use the avalanche. If the snowball method appeals to you, then the interest rate will only matter for debts that are close in size. What are your savings goals? Are you saving up for a vacation, new kitchen cabinets, remodeling your bathroom, a new couch, getting your car fixed before it stops running, Christmas presents, buying this year's yearbook for yourself or a child? You need to know your savings goals. You need to know how much money you want. You need to know when you need the money. I like to also apply the snowball method to savings goals. Are any of these savings goals sink funds? And then you start subtracting. Take your income, subtract the bills, debts, and other expenses like groceries. This is why knowing the dates is important. If I'm paid on the 1st and the 15th every month, I do not want to pay a huge bill that isn't due until the 20th from the check on the 1st. This may result in your huge bill being taken care of, but not enough money for gas to get to work. It doesn't matter if you have all of your streaming services and cell phone paid for if your electricity gets cut off. When you hit zero, that's it. The goal is to have more money than month. If you have all bills paid, all minimums on debts paid, enough money to pay for food and gas, then you can send the extra cash wherever you want. I do advise debts being your focus because paying off your debts can be like getting an extra paycheck. What you do with that extra depends entirely on your priorities and needs. When you have more month than money, sometimes you hit zero before you get to the bottom of your list. That's never an easy feeling. When that happens, you need to start prioritizing who gets the money, and you start cutting where you can. You need shelter. You need heat in the winter and cooling in the summer. You need nourishment. You need transportation to wherever you are employed. If you have to choose between paying rent or paying the credit card company, pay your rent. If you have to choose between food in your or your children's stomach or paying the credit card can wait. There's nothing easy about where you are, and it's very easy to slip into a panicked, animalistic state of mind, which result in you making choices that aren't best for your long term. Take deep breaths and try to prioritize logically for your situation. What are some of the wrenches that get thrown into a zero-based budget machine? What if my income varies? Then you need to determine your base income. What is the least amount of money you know you will be bringing home? It is preferable to underestimate your income than overestimate it. For example, I'm going to use the 4 paychecks that we've gotten this calendar year in order from smallest to largest. We were paid $985.69, $1,063.27, $1,070.38, and $1,107.01. The pay range has been $985.69 to $1,107.01. The pay average has been $1,056.58. What should I put as the expected income each paycheck? If I go with the average and I have another low check, I will have to rearrange my budget to account for $70.89. That's not chump change for a low-income family. Because of this, I assume each paycheck is $1,000. It's a nice round number. Having $15 less than grocery budget won't really hurt us, and since 3 of the last 4 checks brought home more than the estimate, I'm not stressing over it. What if my bills vary? Hopefully, most of your bills have a low range, but if you have 1 or 2 that just like to bounce around, you need to determine an assumed amount. It is better to overestimate than underestimate with bills. For example, I'm going to use the last 4 utility bills we've received in order from smallest to largest we've been billed. $124.27, $128.71, $135.89, $155.13. The average has been $136. The maximum has been $155.13. An equalized billing plan is available, but we can't sign up until April or May. The equalized billing plan requires 12 months of payments, and I messed up last year and the utilities were shut off for about 30 minutes, which resulted in no longer being able to utilize the equalized billing plan. Depending on where you are financially, you can make your own equalized billing plan if it either isn't offered with your variable bill or you don't want to actually sign up. Some companies charge a service fee for equalized billing. Some people simply don't want to rely on the company not making a mistake. In this case, I might put $150 as the assumed bill. I know we're entering warmer months, and I will be using AC, which will increase the monthly bill. I would much rather overestimate my bills by $20 or $30 than underestimate by $20. Another reason is, if I have a month where our pay is lower than anticipated, combined with the bill being higher than anticipated, then my budget will be off by $40. If you have a higher risk tolerance, you may use the average as your budgeted amount. What if I have a surprise bill? I actually got 3 surprise bills this last couple of weeks, each representing a different type of surprise. I got charged for a pre-order from Amazon. I knew it was coming this month, but I didn't know exactly when, and since they have the price guarantee, I wasn't entirely sure of the price. I got my husband's quarterly disability insurance. Not only do I regularly fail to remember that it's coming when I'm setting up our budget, this one came after the month's budget was set and money was being sent to its location. Too late to update the February budget. The payment is due on March 1st. During our seasonal HVAC check, the man found that we were about a pound low of antifreeze. He said there may be a leak, and the compression unit needed, coolant, and the compression unit needed to be switched out because it was on the way out. Are you seeing my surprise is in quotes? Only one of these bills can actually be classified as an unexpected expense, but none of them were included in the budget. There are a handful of solutions for surprise bills. These are not the only solutions, and they can be used together. You can rearrange your budget. If you get the bill before too much of the money is actually dispersed, and depending on the amount of the bill, you can pull it from various categories. Maybe you'll spend $20 less on groceries and put off buying the dress you've been saving up for a little longer. Your buffer can take the hit, and you'll just build it back. You don't want or can't pull from different categories, so you keep going this month like normal, and next month or over the next few months, you'll spend a little less than what you make. I used to have a $100 buffer in our checking account. When a bill was $5 more than expected, I didn't worry because I had built-in room for mistakes. Some people have a $1,000 buffer. Some people have months' worth of income. The amount of buffer you have depends on your situation. This is why we have sync funds. This is for annual, biannual, or quarterly bills that you know are coming but may be forgotten when you actually figure that month's budget. A sync fund is basically one bill spread over whatever period of time you want to save up for. You can have a separate fund for each bill. You can have one account that covers several combined bills. The fund can basically be a rotating door. As money gets taken out, it gets replaced. or it can be for a one-time purchase. I'll make a post about safe funds later. You have a windfall. Whether it's large like lottery winnings or an inheritance, nothing to laugh at like bonus or those extra paycheck months, or simple like $50 then more than expected on your check, if you don't have a plan, your windfall will disappear faster than dust in the wind, and all you have to show for it is fast food containers, or a shiny new electronic gadget, or a shiny new car. While windfalls will not wreak havoc on your zero-based budget, they will leave behind a trail of regret and missed opportunities if you don't have a plan in place. Some things to consider, preferably before that windfall finds its way into your bank account, are: do you have a list of things that need to get paid off or paid for? Is there a big ticket item that you need to deal with either right now or you can see coming down the pike? Maybe you want to just save it. Cool your heels and think about what the best use for it will be. You've earned this money, you've had your eye on something shiny and new, and you just want to spend it. Like everything else financial, what you do depends on where you are. You can even do a combination of the above. Typically, for my husband's bonus checks, I'll apply the majority of it to wherever falls in line with our financial plan, and a chunk is moved over to his personal account. We agree on this amount ahead of time, and it's our way of acknowledging that this is money we wouldn't have if he didn't go above and beyond at his job to support the family. I'm partial to having a list. I'll call it an attack list, my order of attack, and rarely my hit list. This is a list of debts and or saving goals in the order I want to pay them off and or save up for them. Try to do at least 3 goals ahead. This helps me keep money going where I want it to go. Make your list before the extra money comes in. Once that money is in your bank account, you're less likely to look at things logically. The list you make can be for business or pleasure. You can be focused on what debts to pay off, or you can be focused on what big ticket items you want to save up and purchase for. It can be a combination of business and pleasure. Again, the focus depends on where you are financially. Keep track of your list. Put the piece of paper somewhere where it can be pulled out as you progress. You should also review your list. When your oven stops warming reliably, you should probably adjust the list to have a savings account for a new oven put at the top. As you mark things off, you may want a new list that doesn't have all of your former goals on it. Rewriting the list is a perfect opportunity to also review the order of items on the list. If you use the zero-based budget, how does it work for you? If you don't use this budgeting method, what method do you prefer?